you can see there's a massive upside. The problem with this is, all right, welcome to Talkin' Investing. I am Tom, and as always, this is not financial advice. Today, I want to go through 3 stocks that are on my watch list that are hitting their 52-week lows right now. And not only are all 3 of them hitting their 52-week lows, they're hitting numbers I never thought that I would see them at. So I want to go through those 3, take a look at them, and take a look at their charts. And we'll also talk about the fact that all 3 of them have earnings coming up, one as soon as today after the bell. So I wanted to get this out here today. If you're new to the channel, please hit the subscribe button and the notification bell. Also, if you enjoy this video, please smash the like button and feel free to leave a comment below with any of your thoughts or any other stocks that you have that are at a 52-week low or a number you never thought you would see them at. So with that said, let's get to the first stock. The first stock is Beyond Meat. They are now trading at $48.64. They're down $1.83 today, so this is the first time they've ever been under $50. It was just a little bit ago that it was the first time they were ever under $60. This stock was trading as high as $162 within the last 52 weeks. So this has been a fall, and it just keeps falling. I did not buy it at 60. I started to look closely when it got down to 60, and then it was approaching 50. Now it's under 50, so I don't know just how low this can go. It still has a $3 billion market cap, and there's a lot of downward pressure on the market. This is the 4th day in a row red in basically all of the major indexes. A lot of them are getting very close to bear market territory, the NASDAQ and the Russell 2000 in specific. So it's hard to pick a bottom on these stocks. I am going to make a separate video on Beyond Meat because I do have a bull thesis for this company. However, at the moment, it seems to be a falling knife. So I'm not sure I'm ready to buy in yet. Maybe it's time to start dollar cost averaging in. I'm not sure. Again, I never thought I would see this under $50. So from that perspective, you know, I have to take a serious look at it. And obviously, none of this is financial advice. Please do your due diligence on all 3 of these stocks. They're all very volatile. They're all obviously trading at their 52-week low. So there's some risk involved in all of these. So please be careful trading. Okay, so with Beyond Meat, you're going to see earnings date February 24th. So that is tomorrow. So obviously, that is another reason to be careful. Earnings day can be a very volatile day. I find it's very difficult to predict how the market is going to react to earnings. I'm just going to zoom out for 1 minute because you'll see that just a few months before this, they actually peaked at $221. They quickly traced down to $100 and then back up into the $158 to $160 range. So I'm going to ignore all those other numbers between 150 and 211. I don't really think any of those numbers are in play. In fact, I think this 158 number is starting to become out of reach in the short to midterm. But let's look at where the stock is right now. It's trading at $48.70. So today is February 23rd. If I go back a little over 1 month to January 13th, this stock was trading around $75, almost $76. That represents a 56% price increase in this stock, just to get back to where it was just over 1 month ago. No real news over the last month, just a continuation of what you can see is a downward trend starting all the way back in June that has just continued on for the last 7 or 8 months. So if and when the market gets healthy and turns around, and depending on their earnings report, I think there's a lot of upside to this stock. Like I said, I'm going to make a separate video. I have some reasons that I think this stock has a chance to explode. In the meantime, just to retrace the steps back a month would be a 56% increase in the price of the stock. If we go back to their November highs, so November 3rd, so that was about 3.5 months ago, that would be a 116% increase in the price of this stock. That's a couple of reference points that I'm using. I'm not sure I'm ready to say they're price targets yet because I'm not sure where this is going in the short term, but I do have a long-term bullish outlook on this. Again, this is not financial advice. You guys have to do your own due diligence and decide what's going to be in your own portfolio. But I think there's upside ahead on this one. Having said that, in the short term, I do think there's probably more downside. The next stock SOFI Technologies, stock ticker SOFI. SOFI is under $10. I never thought I would see this stock get under $10. Right now it's at $9.97. On the day it hit a low of $9.93. This stock was trading at nearly $25 within the last year. It's fallen precipitously. They've actually gotten a lot of good news. It's under an $8 billion market cap right now. This stock feels oversold to me. I need to do some more due diligence on this one. This has been on my watch list. These stocks that I'm mentioning today are a little bit bigger than the typical ones that I look at, but they are still pretty small. I mean, this is under $8 billion. And I think that's the biggest of the three. So I tend to focus on small cap stocks, but these are in the neighborhood. And obviously, this is a very high profile stock. Most of you are probably familiar with the company, even if you haven't done any deep due diligence on it. So these guys report earnings March 1st. So today is Wednesday, and that is next Tuesday. So they will report their earnings next Tuesday. So again, that's usually a volatile time potentially. So I just like to point out that earnings date because it is coming right up. This is SOFI on the one-day time frame. So each one of these candles represents one day. So I'm zoomed out a little bit to start with because I want to show you this stock has been up around $25 three different times. Back in February of 2021, it got back there again in June of 2021, and then it got back there again in November of 2021. So this was just a little over 3 months ago. This was very close to a $25 stock. So you can see that that is a point that this tends to gravitate to. It was trading in a pretty natural range up and down between a low of 15 and a high of 25, and then come January of 2022, it broke out of that to the downside. So this is another one. Once you've broken a line of support, I don't know how low this is going to go. And really, we just broke out of this line of support yesterday. So you can see the gap down. This is 1, 2, 3 days down, has taken us to a new 52-week low. It's taken SOFI under $10 a share. So all three of these stocks, I'm going to just caution that this has been a pretty direct line down over the last 3.5 months, and it's very hard to pick the bottom. Again, a strategy I'm considering for this, and I have not yet invested in this either. This was one I really wasn't considering until it got to these ridiculously low price points. So this would be another scenario for myself where I may consider dollar cost averaging in. It's just there's so many stocks hitting their 52-week low. You know, I can't go into all of them. So, you know, I have to do the same thing you guys have to do. Do your own due diligence and see which ones you think have the most upside in the future and the best risk reward. But this is getting to a point where it is at a 52-week low. It's at a number I never thought I would see it at. If it were somehow able to get back to where it was just a little over 3 months ago in November of 2021, that would represent a 145% increase in the price of this stock. So you can see there's a massive upside. The problem with this is there's no real line of support, so I don't know what the downside is. So again, please be careful when investing, and remember, these guys announce earnings next Tuesday. The final of my 3 stocks, I do own this one. This is Fubo TV, stock ticker FUBO. Fubo TV today went under $8. This is a shockingly low number for me. You'll see this brings them down to a market cap of $1.2 billion. This stock within the last 52 weeks was trading at $43. Within the last few months before that, it was up over $60. It's now down to $7.79, $7.80. So when this got down to $10, I felt like this was about as oversold as it could get. So you can see this is the danger of trying to pick a bottom. $11 looked like the bottom, $10 looked like the bottom, and then it went to $9, and then it went to $8, and now it's under $8. So I really can't tell you where the bottom on this stock is, but in my opinion, this stock is very oversold. So again, I'm bullish on this. I did a video recently on this. It wasn't a very deep dive. I'm going to do another deep dive on this. I think this company has a huge amount of upside potential. It's a streaming online service. They replace cable TV, so you get all the channels. In addition to that, they have a huge focus on sports, and they have a lot of sports content that is unique to their channel. So they're a very high growth company. They're growing fast. Their stock is shrinking fast for whatever reason. So let's take a look at the chart. This is another one I want to start zoomed out on because very similar to the last one, you'll see this stock has traded near $35 three different times. Back in June of 2021, it was trading around 35. In August of 2021, it got to closer to 34. And then again in November, it got to 35 again. So this was trading in a range of 25 to 35. In November, it broke out of that. It's been a straight line down. There was some support here at $15 that goes all the way back to both May of 2021 and November of 2020. So this has now broken out. This is a 2+ year low here. So when you start to get that far back, it's almost not even meaningful. This is a very different company than it was then, and it has had massive, massive growth, including this entire time when it's been basically going down in pretty much a straight line. So this is a stock that I have started to average into. I also have opened a position in our 10K challenge. So if you want to check that out every weekend, I post an update as to how the 10K challenge is going. A couple of quick measurements. Again, if I just go back just a little over 1 month to January 13th, this stock would have to increase over 100%. So this stock would have to double just to get back to where it was basically 1 month ago. So this stock is on a severe slide, which is why I say, I never thought I'd see it under $10. I don't know how low it can go. So, the risk reward is a tough one. How much more downside is there at this point? The reward side is easier to determine. Just to get back to where it was 5 weeks ago, the stock would have to double. And Fubo is reporting their earnings today. They actually gave a heads up a few weeks ago as to their earnings. They beat revenue. They did not talk about profitability. So they gave us a little bit of a sneak peek, and it looked like good stuff. But you can see the market has not reacted well to it. This is now cascading down to its lowest point in years. If this continues to fall, I'm already in this one. So I will dollar cost average into this one if for some reason earnings are received poorly by the market. But of course, this is not financial advice. That is what I'm doing. This is how I'm playing this. Please do your own due diligence. As you can see, and as I've shown you, this stock is falling fast. So this is one to be careful on. I'm dollar cost averaging in, but you guys got to decide what you want to do. So those are my 3 stocks that are at their 52-week lows and that are at numbers I never expected to see them at. So good luck, invest wisely, and thanks for watching, and I will see you in the next video.